Welcome to the Demet in Dubai podcast series. Pronounced Demet, your destination for in-depth insights into Dubai's real estate sector. It's important to emphasize from the outset, Demet is absolutely not a real estate agent, and the objective of this series is by no means to sell anything. This approach is purely driven by a sincere passion, concrete experience, and solid analytical skills. The role of Demet in Dubai is to help you structure your thinking, analyze, and understand the true potential of investments. This podcast will guide you in filtering out the noise, the marketing, and the false arguments too often put forward. The commitment of this initiative is to provide you with a purely quantitative, objective, and data-driven perspective on this market. The wish of Demet in Dubai is to share knowledge to build a community of informed and savvy investors. Today on the Deep Dive, we're tackling a really crucial question for anyone looking at Dubai real estate. What makes for a truly smart investment? We're diving into why a good real estate investment here relies on what we call an essential triptych.
The triptych.
Yes, it's this powerful combination of three crucial interconnected elements that, when you get them right, really secure the most promising opportunities.
It's fascinating, isn't it? Because the Dubai market, well, it's incredibly dynamic. It's always evolving. But these foundational principles, the ones for identifying high potential investments, they remain remarkably constant.
Exactly.
They're really the bedrock for understanding, concrete returns for investors who want that solid grasp.
Absolutely. So let's get right into the first pillar of this triptych, excellent location. For a real estate investment, and today we're focusing particularly on villas and townhouses, how do we actually define an excellent location? What are we really looking for?
Well, location is absolutely paramount. There's just no getting around it. Now, an end user, someone buying a villa or townhouse to live in, they might be willing to compromise a bit on proximity, for more space.
Sure. Makes sense for a family, perhaps.
Yeah. Right. But for an investor, maximizing returns means identifying areas with strong connectivity. We're talking easy access to Dubai's business centers, the major hubs. This ensures a much broader appeal for tenants now and for future buyers down the line, and that naturally drives price appreciation over time.
Okay, so connectivity is key. Can you give us some examples, communities that really exemplify this, that have matured into these highly desirable spots?
Oh, absolutely. We've seen the incredible power of these large master-planned communities. Think of Dubai Hills, Arabian Ranches, Jumeirah Islands.
Household names, really.
Exactly. And their success isn't just about the quality of the homes themselves, though that's important. It's how they've grown into these self-sustaining ecosystems. They offer everything: schools, parks, shops, even medical facilities. This complete package, this lifestyle offering, is what cements that long-term value.
So it's more than just the address.
Much more. Take Meadows, for instance. It's exceptionally well located near good schools, near the ocean, near Palm Jumeirah, very central. Then you have emerging what we might call super prime locations, like Jebel Ali Village. It offers direct access right onto Sheikh Zayed Road. That kind of accessibility rivals older, established prime areas like the lakes.
Interesting. And what about the very top end, the ultra-luxury?
Well, look at places like Maritime City and the beachfront. We've seen prices there touch 14,000 dirhams per square foot. Incredible numbers. And there's an entire ultra-luxury peninsula being developed there by H&H. They're the developers behind One Zorbil. Very visionary. It just underscores how critical that prime positioning is.
So that community ecosystem, the location's connectivity, it's vital. And that leads us perfectly to the mastermind behind these communities, the developer. Given the sheer pace and scale of development in Dubai, how crucial is the developer's reputation and their track record when you're trying to identify a sound investment?
Look, this point is, frankly, non-negotiable. It has to be a top consideration. Investing with trusted developers, those who have a proven history of delivering these large, complex, master-planned communities, it's absolutely key.
Names like?
Well, the big ones come to mind immediately. Emaar, Nakheel, Miras. They have impeccable track records. They've literally created cities within cities, often built around a central concept, like Emirates Hills with its Gulf focus, or Arabian Ranches with its distinct feel.
Right, they create a brand for the community itself.
Precisely. And developers' master plan, their long-term vision for that community, that directly dictates its future growth, the amenities that will come online, and ultimately its appreciation potential. Take Emar's The Oasis project, for example. It's strategically positioned down in Dubai South, specifically to benefit from all those huge mega infrastructure projects happening in that area. That's foresight.
And we're also seeing this trend quite strongly now towards branded residences.
Yeah.
How does that factor in? Does it add another layer to the developer's reputation and the value?
Oh, it's a critical point, yes. The rise of branded residences like Emar using its address brand within the oasis adds a significant layer of value. This kind of premium branding, it's globally recognized for luxury, for service quality. And what we see is that it often results in, say, 20 to 30% faster appreciation compared to similar non-branded villas.
Wow, that much.
Yes, and on the rental side, they can command premiums too, maybe 15 to 25% more. So that directly impacts value retention and boosts your rental yields. It's really a testament to the power and trust embedded in a strong developer's brand.
That's fascinating. So, okay, we've covered location check, the developer check. That brings us to the third pillar of our triptych, unique property type suited to the market. What exactly makes a property type unique or perhaps particularly well suited for the Dubai real estate market right now?
It really boils down to identifying products where there's limited supply but high demand, that classic economic principle. For villas and townhouses, this translates into focusing on modern contemporary designs, but not just any design they need to offer specific, highly sought-after features.
Like what? What are buyers looking for?
Think about properties with basements. That's a big one. Especially basements designed to incorporate natural light. That's a huge differentiator here. Large, genuinely livable floor plans are also crucial. You know, a 3-bedroom townhouse that's actually 3,200 square feet, that's exceptionally rare today. Most new builds are much smaller, maybe 1,900, 2,000 square feet.
Right. Usable space is key.
Absolutely. And things like rooftop terraces, proper private gardens, properties that back onto water features like lagoons or onto green belts, these all significantly increase the appeal and the value. And of course, standalone villas, even when they're part of a larger master community, they're highly valued simply because of their inherent exclusivity and, well, their increasing scarcity.
This sounds like a perfect storm of factors driving value. You've really clearly highlighted this essential triptych: location, developer, and unique property type. Now let's dive even deeper into why villas and townhouses themselves are considered such unique and frankly high-performing assets in Dubai right now. What's really driving their outperformance compared to other segments?
Well, the core market dynamic here is largely driven by a very clear imbalance of supply and demand. It's quite stark, actually. Dubai is genuinely facing a significant shortage of new townhouses and villas coming onto the market.
Why is that, if the demand is there?
It stems from a couple of things. Primarily, land is becoming increasingly expensive, significantly so. This makes it far more profitable from a developer's perspective to build high-rise apartments. They cover less land per unit and yield higher returns for them on that pricey land.
Ah, the economics for the developer push them towards apartments.
Exactly. But at the same time, the demand for villas and townhouses has just dramatically increased. This is fueled partly by Dubai's own 2040 urban master plan, which projects a doubling of the population. More people means more need for diverse housing.
And families, presumably.
Yes, Dubai is attracting more families globally, and they inherently require larger living spaces. Plus, existing residents are upgrading, maybe their families are growing, or they simply want more space, a garden, a better quality of life post-pandemic. So you have this rising demand hitting a constrained supply. That scarcity of these larger, family-oriented units is a major, major driver of their unique performance and value growth.
That strong demand-supply imbalance makes a lot of sense. It's quite compelling.
Yeah.
So let's talk numbers. What kind of outperformance are we actually seeing? Can you give us some concrete examples?
Yeah.
How have villas and townhouses delivered these, well, truly remarkable returns compared to other property types?
Absolutely. The capital appreciation we've seen has been quite remarkable in many cases. Let's look at some specifics. In Al Furjan, which is a community that has matured nicely, we saw, for instance, 1-bedroom units that initially sold around 850,000 dirhams, now trading at about 1.3 million dirhams. Decent growth.
Okay.
But the really striking figures often come from the larger properties, the townhouses and villas. Look at Arabian Ranches 3-bedroom townhouses there, originally priced around 1.25 million dirhams at launch. They're now selling on the secondary market for 2.7 to 2.8 million dirhams.
Wow.
And the 4-bedroom units in the same community, they started around 1.75 to 1.8 million dirhams. Now they're worth close to 4 million dirhams.
More than double their value in just a few years.
Exactly, more than double. And it's not an isolated case. Villanova, another popular community, has seen consistent capital appreciation, maybe around 15–20% in recent years.
Those are truly impressive figures. For our listeners, what does more than double in just a few years tell us about the current market velocity for these specific assets, especially when you compare it to, say, apartment appreciation over the same period? Is this kind of growth sustainable?
Well, it tells us that for these specific property types, villas and townhouses, especially within well-planned, desirable communities, the market is experiencing incredibly robust, sustained demand that is significantly outstripping the available supply. Take established communities like Dubai Hills Estate. If you look at median prices per square foot there, they've jumped consistently from around 1,000 dirhams per square foot a few years ago to nearly 2,000 dirhams now. We've seen yearly appreciation figures there like 24.2%, then 22.8%, then 25.9% in consecutive recent years.
It's very consistent growth.
Very. So this isn't just a momentary blip or a flash in the pan. It reflects a fundamental shift in buyer preference towards larger, family-oriented homes with more space amenities. And let's circle back to the Oasis, that Emaar project with the address-branded villas we mentioned. It's launching now at around 1,700 dirhams per square foot. Now, compare that to surrounding luxury villa communities where prices range anywhere from 2,600 up to 5,400 dirhams per square foot.
So a significant entry point difference.
A very significant difference. And remember what we said about branded villas? In Dubai Hills, they showed about 25% higher appreciation compared to non-branded ones in the same area. The Oasis itself seems poised to follow a similar trajectory to iconic master communities like Emirates Hills, which launched back in 2003, or Dubai Hills from 2013. Those communities saw appreciation of, well, 3 to 5 times their initial value within about a decade.
Incredible returns.
Yeah. Yes. And this hints at the potential, perhaps, for something like a 100% ROI on a 15-20 million dirham investment in the Oasis over a reasonable time frame. So this robust appreciation across various communities, various price points, it really highlights the inherent strength and the depth of demand for these property types. It demonstrates their resilience and their outperformance compared to many other segments in the market, even through recent global economic shifts.
Okay, so given this backdrop, high demand, limited supply, impressive appreciation, what does this all mean for you, the investor? Looking at the current market, let's talk about navigating the new projects out there. What should you look for? Maybe we can segment them a bit by price point and luxury level.
Yes, that's a good way to approach it. The market really does offer a spectrum of opportunities right now. If we start at the top with hyper-luxury projects, we're seeing some incredible value propositions even at high price points. We mentioned Maritime City and Beachfront earlier, touching 14,000 dirhams per square foot, true ultra-luxury destinations. But a really fascinating emerging opportunity is Seneca Island. The price point currently is around 2,200 dirhams per square foot.
Okay.
But the vision for it, it's being positioned as the Hamptons of Dubai. Plans include an ultra-luxury mall, a golf course, a helipad, even an air taxi system. The target handover is January 2027. Its unique concept and that long-term ambitious vision make it a prime example of a potential future growth zone. It's one to watch.
Very interesting concept. And how about Emar's The Oasis, which you've mentioned a couple of times as showing strong potential?
Yes, the Oasis continues to impress and expand. It offers these address-branded villas within a really prime enclave, clearly designed for significant long-term investment potential. They've had several recent launches there. Palmaro 1 and 2, which are 4 and 5 beds, starting around 8.5 million dirhams. Mirage, larger 5 and 6 beds, starting from 15.8 million. Then there's PM3, 4 beds starting at 9.18 million. And the Levita Mansion's huge 6 and 7 beds, starting way up at 36.6 million dirhams. So a range within the luxury segment itself.
Okay. Any other hyper-luxury areas to keep an eye on?
Definitely Jumeirah Golf Estates, particularly the highly upgraded villas there. They're hitting well above 5,000 dirhams per square foot now. The entry point there is typically quite high, maybe 18 to 25 million dirhams, sometimes more. And also District 1 West. It's by the same developer as the original, very successful District 1. It's under construction now with handovers expected in 2026. Prices there are around 2,000 to 2,400 dirhams per square foot. It shows continued confidence from top developers in these prime villa locations.
That's a great overview of the ultra-luxury end. What about investors looking at slightly different price points? The affordable luxury and middle-class projects. What's available there?
Yes, there are excellent opportunities in those segments too. Communities like Al Furjan offer really good value. You have areas within Al Furjan like Marouj. Those are ready now, 3 beds starting from about 2.4 million dirhams, 4 beds from 2.9 million. Then there's Talal and also Jebel Ali Village, which is currently under construction with handovers expected in 2025 and 2026. Prices in these Al Furjan communities are typically between, say, 1,500 to 1,800 dirhams per square foot. Good value.
Okay. Any others in that bracket?
Villanova by Dubai Properties, that's located out in Dubai land. It's another fantastic option offering 2, 3, and 4-bedroom townhouses, plus some standalone villas. Prices there start even lower, maybe 1,350 to 1,450 dirhams per square foot. From a price per square foot perspective, it's arguably one of the best value communities. You have clusters like La Quinta offering standalone villas starting from around 4 million dirhams, and La Rosa or Philia have 3 and 4-bed townhouses from about 2.6 million.
Right. And then there's the Valley. That's another EMAR project located on the Dubai Al Ain Road. It's considered more of a mid-segment community, but again, with strong growth potential because of EMAR's master planning. They have new clusters launching, like Kaya 3-bed townhouses from 2.72 million, 4-bed corners from 3.29 million. Ilea offers slightly larger units, 3 beds starting at 2.99 million, 4 beds at 3.45 million. And even Demet Lagoons offers some competitive options. You might find, say, a 7-bedroom unit right on a lagoon for approximately 12 million dirhams. For that size and unique feature, that's considered a very attractive price point in the current market. So a real range of options across different price bands. Now, looking beyond the individual projects and their price points, what about the bigger picture? What larger elements, these macro drivers, are shaping the long-term value and potential of these investments?
This is crucial because it really connects to the broader vision for Dubai's future. There are massive infrastructure projects underway or planned that are set to completely redefine the landscape and significantly bolster the economy. And that, in turn, drives property values.
Such as?
Well, top of the list is the huge expansion of Al Maktoum International Airport. It's designed to become the world's largest airport, eventually handling 260 million passengers a year. Think about the economic impact of that.
Yes.
Then there's the Etihad Rail Network. It's going to connect 11 cities across the UAE with a major new terminal planned at Dubai Industrial City near Dubai South. That enhances logistics and connectivity. We also have the Loop, that proposed underground sustainable transport system, potentially using technology from Elon Musk's Boring Company. The promise is travel from downtown to the marina in under 10 minutes. Game-changing if it happens.
Oh.
And don't forget, the Dubai Logistics Corridor, this huge multimodal trade and logistics hub centered around Jebel Ali Port. These major initiatives, coupled with other significant developments like the enhancement of Jebel Ali Beach and the planned revival of Palm Jebel Ali, they will all significantly drive demand and property values, especially in surrounding areas, for years to come.
So infrastructure is a massive catalyst.
Absolutely. And we also anticipate a potential surge from international investors, particularly perhaps from markets like Singapore and China. And the upcoming integrated resort with a casino, expected around January 2027, could also attract a new wave of investment and tourism. Beyond the big projects, the best-performing communities themselves are increasingly incorporating really comprehensive amenities. We're talking multiple parks, swimming pools, proper sports facilities, basketball courts, cricket pitches, marketplaces, gyms, sometimes even unique features like bird enclosures or open-air cinemas.
Creating that lifestyle appeal again.
Exactly. And the proximity to good schools and hospitals remains a critical factor for end users, the families who will live there. This solidifies that long-term demand and value. It really is about investing in the complete lifestyle that Dubai is actively building and promoting.
This deep dive has certainly given us, and hopefully you listening, a lot to think about regarding Dubai's real estate landscape, especially for villas and townhouses. So to bring it all home, how should investors approach their exit strategies? When is the best time to sell? And just as importantly, what are the critical pitfalls to avoid to protect your investment in this market?
Right, because knowledge is most valuable when it's understood and applied correctly. Exit strategies are definitely a key part of that application. Now, you can certainly look for opportunities at handover when the property is completed. Sometimes there's a bump in value then. But often, the most significant profits, the really substantial gains, are made once a community has truly matured, maybe a few years post-handover, once it's fully established with residents, landscaping, amenities running.
When it feels like a real community.
Precisely. And it's true, as we've discussed, that the greatest profits, in absolute terms, are frequently made in villas. But, and it's a big but, this typically requires a larger entry ticket. For instance, investing in Jumeirah Golf Estates, those large houses, 8,000, 9,000 square feet overlooking the golf course, that might require an entry point of, say, 18 to 25 million dirham.
A significant investment.
It is. However, investments like that have shown potential for maybe a 20–30% return on investment within just 12–15 months in some cases, with potential exit values reaching 35 to 38 million dirhams. Similarly, going back back to the Oasis with its address-branded villas, the analysis suggests potential for maybe a 100% return on that initial 15 to 20 million dirham investment, echoing those earlier successes of master communities like Emirates Hills or Dubai Hills. High potential, higher entry.
So high potential returns, but linked to potentially higher entry costs. That makes
Sure.
sense.
Okay, let's talk about the flip side then. What are some of the critical pitfalls investors really need to be aware of and actively avoid in this market? Yes, avoiding mistakes is just as important as finding opportunities. Firstly, a key rule of thumb for any investor really is to maintain a balanced risk-to-reward ratio. And crucially, avoid over-leveraging yourself. Don't stretch your finances too thin. Secondly, while quick flips can occasionally work, a general piece of advice, especially in this market, is to plan to hold your property for perhaps 3 to 5 years, rather than aiming for immediate flipping right after handover. Consistent appreciation often needs a bit of time to materialize fully as the community matures.
Patience is a virtue then.
It often is in real estate. Another pitfall. Be very wary of locations where there's a projected oversupply of a particular product type. For example, some areas might see a huge number of very similar small, affordable townhouses all handed over around the same time. That can create short-term pricing pressure and make it harder to achieve your target appreciation or rental yield.
So understand the micro-market supply.
Exactly, and linked to that, be selective about the actual product, the floor plan, the features. If all the houses in a community are very generic, very similar, or if a community is launched at a very high price per square foot right from the beginning, well, there might simply be less room left for future appreciation. Look for those unique features we discussed earlier, the basements with natural light, the genuinely larger layouts, specific views like backing onto a lagoon or a green belt. Those are the differentiators.
Things that add intrinsic lasting value.
Correct. Also, be aware of the specific challenges with off-plan resale. That's buying from an original investor before the property is built. While deals can sometimes be found, it often requires a very significant upfront cash payment, maybe 40%, even 50% of the property value, for something that might still be years away from completion.
So your cash is tied up for a long time.
For a long time, yes. It's not working for you elsewhere during that period, so you need to factor that into your overall return calculation.
Good point. What else should people watch out for?
A few more practical things. In some high-end villa areas, being located too close to large apartment complexes can sometimes be a turnoff for potential buyers or tenants seeking maximum exclusivity and privacy. It's a subtle point, but worth considering. Pay attention to the practical aspects of the layout, kitchen size, room dimensions. We have seen some layouts, even in larger 4- or 5-bedroom properties, that have surprisingly small kitchens or somewhat constrained living areas. Look at the floor plan carefully.
Practicality matters for living.
It really does. Also, check for adequate visitor parking in newer communities. It sounds like a small detail, but it can become a real daily frustration if it's lacking. And, repeating what we said earlier because it's so important, always invest with a trusted, reputable developer. And, just as crucially, choose your property consultant wisely. They are your guide, your advisor in this complex market, so make sure they are knowledgeable and trustworthy. Finally, remember the timing aspect. History shows that investors who bought into the earlier phases of large master communities have consistently made more money compared to those who invest in the later stages.
Why is that?
Because the developers themselves typically increase prices with each new phase release as the community develops and demand proves itself. So getting in early on, a strong master plan often yields the best long-term returns.
This has been an incredibly insightful deep dive. You've offered a truly data-driven, objective look at the Dubai real estate market, particularly focusing on the villa and townhouse segment. We've unpacked that vital triptych: location, developer, and property type. We've highlighted the impressive outperformance and resilience these assets have shown, and we've navigated the landscape of new projects and, just now, those crucial pitfalls to avoid.
Yes, and with Dubai clearly in such a transformative period, with all this major development happening, and with these specific insights into the villa and townhouse market, it really raises an important question for you, the listener. What do you think is the most impactful takeaway from our discussion today for your own investment strategy? What stands out to you as the biggest opportunity, perhaps? Or maybe the most critical warning sign, the biggest pitfall that you'll be considering more carefully now? Your continued exploration, your own analysis, and your informed decision-making, that's truly what drives success in navigating this dynamic market.